Hey, it's Peter from ShadowTrader.net and the Weekly Options Room, and I just wanted to give you the state of the markets real quick on this Monday afternoon. So I'm kind of focusing on these 61.8% fibs, which are measured from the low of here 4.7 to 4.9, April 7th to April 9th, and you can see the S&P right here. S&P cash is coming very close to the 61.8, and this is kind of a do or die level, which I think is very important. And just today, the NDX actually touched down to that level. And as I'm speaking to you here on late Monday, we're bouncing a little bit off of it, but that's what I believe is the reason, is because the NDX touched right down to it. And what makes this a little bit tricky is that the three largest sectors here of the S&P, which would be financials, technology, financials, and healthcare in that order, you can see that technology has touched right down to the 61.8, could easily break lower. But when you look at financials, they are just touching the 50. They're just right here. And finally, last but not least, healthcare. And this altogether is about half the market. Healthcare is extremely weak. It's broken through all of the levels, meaning the 50 and the 61.8, it's well below. So I think healthcare is going to make a round trip to here. But the fact that those three are slightly different causes a little bit of chop, not too much. But that's basically the situation in the markets. I think that the markets have good potential to move lower here. I am underexposed to it, as I discussed in the video last weekend, and I'll fully admit that. And for whatever reason, I'm absolutely fine with it. I don't like this market. I don't like this sort of H pattern picture here. This is called the H pattern, which I call hell for shorts. It's not hell for shorts yet, but when it gets down here, a lot of people will short this market. And unless there's some news behind it, it will probably go a little bit lower and bounce hard and frustrate everybody. Not to say that there's not a playable move from here to there, but the tempo has been quite slow. There has not been a whole lot of emotion. Definitely the sellers are there today. I'm not denying that. In no way, shape, or form am I being bullish. I'm not even really being neutral here. I'm just telling you that I'm not very short. I don't have anything on really to the downside, and I'm fine with it. You know, I can miss a move. It's not that big of a deal. I just don't like where we are. I don't like the pattern. And I think just kind of being here where we are in the sort of middle of the range, 50 to 61.8 is not the greatest place. If you don't have good location for a short like here, as this, before this breakdown occurred, then I'm not sure that this is the best location. So that's basically how I'm seeing the markets as of now, and I urge everybody just to be safe out there and do not chase things. If the move does start down or continue down, I should say, a little bit more, be very wary of your location over the next couple of days of where you initiate trades in wherever in this level or area we may be. All right, that's usually one of the most dangerous things that can happen, is that you have a sort of fear of missing out and your location is poor because you're joining the party too late. So that's another reason also why, when I look at what's happened here over the last few sessions, and today was definitely an expansion of range to the downside, but I'm underexposed to it right now. I'd rather do nothing than get exposed to it at poor location later. Hey, this is Peter from ShadowTrader.net, and I just wanted to thank you for watching this video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in my weekly options advisory, then check out the link in the description below. I wish you good trading, and I'll see you in the room.